What if you could tell the story of a market's mood just by looking at a simple graphic? Sarah, a new trader, sits in front of her computer, staring at a colorful candlestick chart. It's a jumble of green and red shapes, like a vibrant city skyline at dusk. But instead of buildings, each candlestick represents a moment in time for a stock. Confusing, right? At first glance, Sarah sees a random assortment of candlesticks, each one standing tall, or maybe not so tall, depending on the price movement. But here's the surprising part. Each candlestick is a treasure chest of information. The body of the candlestick tells her the opening and closing prices for that period, like the score at the end of a game. If the close is higher than the open, it's a green candle, signaling a victory for the bulls. If the close is lower, it's red, a win for the bears. But wait, there's more. The wicks, those little lines sticking out, represent the high and low prices reached during that time frame. So while the body shows the outcome, the wicks reveal the journey, how far the price climbed or fell before settling. Imagine a marathon runner who started strong but hit a wall. Those wicks tell the tale of both triumph and struggle. As Sarah digs deeper, she begins to understand that these candlesticks aren't just pretty shapes. They're a narrative of traders' emotions, fears, and hopes, all captured in a single glance. With each color, each shape, she realizes she's not just looking at numbers, but rather reading the market's heartbeat. In essence, a candlestick chart is like a mood ring for the market, revealing the feelings of traders through the language of price action. And with that insight, Sarah feels a spark of clarity. As Sarah stares at the chart, the candlesticks begin to transform from mere shapes into something more meaningful. Each candlestick represents a specific time frame, whether it be a minute, an hour, or a day. Imagine each one as a small window into the market's mood during that period. This is where the magic happens. Now let's break down what each candlestick is telling us. Picture a candle. Yes, a real candle with a flickering flame. The thick part of the candle, known as the body, shows the price range between the open and close. If the candle is filled or colored, it means the price closed lower than it opened, like a candle that's been snuffed out. If it's empty or white, the closing price is higher than the opening price, almost like a vibrant flame bursting to life. Here's where it gets interesting. The wicks, or shadows that extend above and below the body. These wicks represent the highest and lowest prices reached during that period. Imagine a candle flickering in the wind, reaching upward as high as it can, before being pulled back down. The top of the upper wick shows the highest price, while the tip of the lower wick shows the lowest price during that time frame. So when Sarah looks at a candlestick, she isn't just seeing colors and shapes. She's witnessing a market story unfold, a tale of where traders were willing to buy and sell, their optimism and their fears. Each candlestick is like a chapter in the market's ever-evolving narrative, reflecting a push and pull between buyers and sellers. And here's the surprising part. When you start to understand these components, you begin to see not just numbers on a screen, but the emotions and strategies that drive those numbers. What will Sarah find next as she continues her journey into the depths of candlestick charts? As Sarah dives deeper into the candlestick chart, she can't help but notice a pattern in the colors. The candlesticks are painted in vibrant hues. Green signifies price increases, while red indicates decreases. At first glance, it seems like a simple color scheme, but the implications are profound. Think of it like a traffic light. Green means go, red means stop. In the world of trading, these colors convey the market's emotional heartbeat. When you see a green candlestick, it's like the buyers just took control of the wheel, steering the price upward. This reflects optimism. Traders believe the asset is worth more, so they're willing to buy at higher prices. On the flip side, a red candlestick signals the sellers stepping into the driver's seat. The price drops because traders are less confident, and they're eager to unload their assets, fearing further declines. It's a push-pull dance between buyers and sellers, and the colors reveal who's leading at any given moment. Here's the surprising part. That color coding doesn't just help you understand past price movements, it also offers insight into future possibilities. If you see a series of green candlesticks, it suggests a strong buying sentiment, whereas a string of red ones might indicate rising fear or uncertainty among traders. So, as Sarah studies the chart, she recognizes that these colors are more than just pretty visuals. They're a window into market sentiment, showing her who's in control. This newfound understanding allows her to read the market's mood with clarity. As Sarah dives deeper into the world of candlestick charts, her curiosity sharpens. The jumble of colored bars used to look like chaos, but now they begin to tell a story, one she's eager to decode. Each candlestick, she learns, is not just a data point, it's a piece of the market's emotional landscape. Imagine driving through a city and encountering traffic lights. A green light signals it's safe to go, while a red light commands a stop. Candlestick patterns function similarly in the trading world, guiding investors on when to move and when to pause. Sarah discovers that when she sees a string of green candles forming a strong upward trend, it's like those green lights blinking in succession, a clear indication that the market is driving forward, full of momentum and confidence. But it's not just about the green candles. The red ones are equally telling. A cluster of red candles can signal a potential downturn, much like a yellow light that flashes as a warning to slow down and prepare to stop. She learns about patterns like the hammer and the shooting star, each revealing the market's potential shifts. For instance, when a hammer appears after a series of red candles, it suggests that buyers might be stepping in, ready to catch the falling price. Here's the surprising part. These patterns can indicate possible reversals or continuations. A series of green candles could suggest optimism is taking hold, while a sudden shift to red may signal a retreat, prompting Sarah to pay closer attention. It's as if the market is communicating its intentions, and she's finally learning to listen. Understanding these patterns gives Sarah a sense of empowerment in navigating the chaotic world of trading. The candlestick chart is no longer just a jumble of colors. It's a vivid landscape of market sentiment, revealing the underlying rhythm of buyers and sellers. What could she discover next on this enlightening journey? As Sarah gazed at the candlestick chart, she noticed a small, vibrant red candle that seemed to leap out at her. It represented a single hour of trading, showing a sharp drop in price. But then, she flipped to the daily candlestick chart, and there it was again, the same drop, but this time it was just a tiny blip, barely noticeable amidst a series of larger green candles that spanned several days. It struck her. The significance of a candlestick could change dramatically depending on the time frame she was looking at. It's like using a camera, she thought. When you zoom in close, every little detail pops out, like that sudden drop. But when you pull back to see the bigger picture, those tiny fluctuations can fade into the background, revealing a more stable trend. And here's the surprising part. Traders often use different time frames to build their strategies. A day trader, for instance, might rely heavily on minute and hourly candlesticks, seeking quick gains from those little spikes and drops. Meanwhile, an investor looking for long-term trends would focus on daily or even weekly candles. Those will tell a story of consistency and resilience over time. This understanding is crucial because, without context, a single candlestick can be misleading. That sudden plummet could signify panic selling in the short term, or it could just be a natural fluctuation in a longer-term upward trend. Sarah realized that by adjusting her perspective, she could interpret the market's movements more accurately, making sense of the chaos around her. Now when she looks at a candlestick chart, she knows to ask herself, what time frame am I really seeing? Understanding this gives her the clarity she needs to navigate the market's ebbs and flows. As Sarah sat in her cozy home office, surrounded by screens glowing with market data, the real lesson began to crystallize. She had spent hours diving deep into the world of candlestick charts, tracing the patterns and inferring potential price movements. But now, as she stared at the colorful array of red and green, the realization struck her. These charts were rich with information, yet they were just one piece of a much larger puzzle. Picture a detective piecing together a mystery. The candlestick chart with its open, high, low, and close prices represented the clues. But without the context of market sentiment, economic news, or significant events, those clues could lead to dead ends. For instance, a bullish candlestick might suggest rising prices. But if there's a major economic downturn looming, like a potential recession, those gains could quickly evaporate. Sarah recalled a recent day in the markets when a surprising jobs report sent stocks tumbling, despite a series of bullish candlesticks from the previous week. It was a perfect example of how external factors can overshadow the patterns on her screen. And here's the surprising part. Viewing candlesticks without context is like reading a novel one page at a time without knowing the plot. You might understand the individual lines, but miss the overarching story. So, the next time you look at a candlestick chart, remember, it's not just about the patterns. It's about understanding the story behind the numbers, the broader market trends, and the news that could sway investor sentiment. By doing so, You empower yourself to make more informed decisions. If you found this explanation helpful and want to unravel more market mysteries together, you know what to do.